What if I simply copy my PMS portfolio into another account? Why pay fees at all? Well, that's a tempting question, right? After all, in a PMS, the stocks are held directly in your name. So if you can see the holdings, why not just replicate them for yourself? It's not that simple because investing is not just about the stocks, it's about the process behind them. For example, by the time you see a stock in a PMS portfolio, the manager may have already built the position weeks or even months earlier. So your entry price could be very different from theirs. Then there's execution. Institutional managers often have access to block deals, OFS opportunities, broker networks, sources of liquidity that an individual investor may not have. But the biggest difference is something you can't copy, that's conviction. You can see that a stock was bought. You usually can't see why it was bought. What is the investment thesis? What would make the manager sell? How large should that position be? How much risk should be taken? Those decisions are often more important than the stock picking itself. So when investors try to copy a PMS, they're often copying the outcome, not the process that created it. And if you still feel the fees aren't worth it, that's okay too. It may simply mean the manager hasn't demonstrated enough value for you. Because ultimately, you're not paying for a list of stocks. You're paying for the research, execution, risk management, and decision making behind them. Thank you and see you soon.
Please note this content is intended purely for education and discussion purposes. It should not be construed as investment or tax advice. Please evaluate suitability and consult your respective financial and tax advisors before making any decisions.